IndusInd Bank recovers 9% from lows. In fact, is the top Nifty gainer, even as the bank reported a loss of over 2,300 crore rupees in the fourth quarter on account of accounting issues and MFI stress. The management says they hope to start FY26 on a clean slate without carrying forward any of the past issues.
Colgate slips close to 5% following a weak showing in a tough environment and intensified competition. The revenue misses estimates, EBITDA and profit as well meet muted expectations.
Mankind trades under pressure on the back of an operationally weak quarter. Margin contracts 8.3% year-on-year. Profit also declines nearly 10%.
BA Tech Wabag rallies close to around 6% in trade after it reports a solid set of numbers. The revenues rise by 24% from a year ago. The management tells CNBC TV18 that the order book will increase to the range of around 16 to around 17,000 crores.
NTPC Green trades higher post its fourth quarter results. Revenue increases 22.5% from a year ago. Margins expand while profit after tax also sees a significant rise.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. Hey, Mangalam. The screen, actually, we should get a couple of indices that come up in just a bit. I think they should come up. Yeah, more red than green is what we are seeing. However, the broader markets, you have a high number of stocks that are advancing in comparison to the number of stocks declining. So, glimmer of hope there.
There is a glimmer of hope there, Nigel, but it is all volatile. At one point it was high. Right now it's actually, split right down the middle. We have just 20 stocks higher as against the number of stocks which are lower. In fact, as we speak, the crisscross lines come up for you on the screen. They have, intersected. But alongside that, we also have Yash on the screen because he's got us an exclusive. As the news flash at the bottom of your screen tells you that the SEBI may release its circular soon on weekly index expiry days. Yash joins in with more. Yash, what are these days and what does it mean for both BSE and NSE?
Well, of course, the important piece of news is that the circular, when it comes to weekly index expiry, is expected shortly. This is from the doors of market regulator SEBI. Of course, SEBI had put out a consultation paper very recently after the flip-flop in expiry days between the two exchanges, NSE and BSE. What SEBI had said in the consultation paper is that there would only be two expiries. One would be on Tuesday and one would be on Thursday. So there's this enough gap between the two expiries. And of course, once the final regulations are out, then it will be decided which exchange gets what day as its expiry. What we've been given to understand is that the National Stock Exchange, NSE, has already applied with market regulator SEBI when it comes to having Tuesday as its expiry day. What that means is that if NSE is given Tuesday as its expiry day, then BSE naturally would be given Thursday as its expiry day, as SEBI has said that both expiries from both exchanges cannot be on the same day. What we've been given to understand from our sources is that SEBI appointed SMAC, which is the Secondary Markets Advisory Committee, met recently to discuss and suggest the final regulations around the expiry days to market regulator SEBI. As I said, NSE has already applied for Tuesday when it comes to that expiry day. Also, what we've been given to understand is that market regulator SEBI is actively considering NSE's request to grant Tuesday to the exchange as far as its expiry day is concerned. This could be negative, as analysts suggest, for BSE because the numbers that we've been getting from analysts is that this could lead to a migration of about 20% volumes away from BSE, 15% could migrate to NSE. This could also lead to an increase of nearly about 5% market share in index options for NSE. These are the numbers largely that we've been collecting from analysts, but certainly could be negative for BSE.
All right, negative for BSE. If NSE gets a Tuesday, BSE gets a Thursday. Wonder how that goes on. We'll await the circular, as Yash said, should be out anytime soon. But let's get in some technical perspective on the market as well. 24,600 is where the Nifty is right now. The mid-cap index shade better in terms of falling not as much as the frontline indices. And the Nifty Bank actually is also outperforming, currently just below its 20-day moving average. We do have Sachidanand Uttekar joining in for a quick check on the market. Sachi, what are your thoughts on the index right now? Do you think this is a dip worth buying or maybe just stay away until the expiry is out of the way?
Good morning, Mangalam. Good morning, Nigel. Clearly, I think the market is under pressure. And if you look at the broader structure, it looks like a major consolidation phase The base for this particular range is placed somewhere close to around 24,450, 500. I think that will be an ideal level wherein some control longs should be deployed. On the higher side, at least for the day, it looks very difficult for the Nifty to, recoup about that 24,790, 800 kind of a zone. But as of now, I think it looks like a sideways to negative day with the resistance clearly placed at 24,800. But I think the support, if we get a dip towards 24,450, 500, I think that will be an ideal level wherein some contra long positions can be deployed. When we look at Nifty Bank, clearly, 54,956 is the immediate level. And we see this particular level as a very strong resistance. The index has been, trending below its 5-day exponential moving average. And if you look at the data, it looks very certain that we may see a further swing towards 54,400, 450, within that particular range. So I think it's better to take contra bet on the Nifty on the long side in case if we see lower levels close to 24,450. But if you are trading Bank Nifty, then I think the bias for the day is negative.
All right. Bias for the day is negative. And individual stocks, are you more on the short side or you may fancy a couple of longs as well?
Mangalam, in fact, both the trading ideas are on the long side. The first one is Bharti Airtel. Now, the stock was witnessing a correction. The correction was very gradual. What we have observed is that the 1800 put writers have been very confident. It's a bearish, a trend structure, but within that, we have seen a breakout from a falling wedge formation on the 60-minute scale, which is indicating that there could be a trend reversal soon. What we have recommended is that the stock may scale towards 1865. The stop loss for the trade can be placed at 1818 on closing basis. Disclosure would be that we have recommended this trading setup to our clients as well. The other stock which has been a very confident outperformer is HCL. Even here, if you look at the last 4 trading sessions, what we have observed is that there is a rising 3 candlestick formation, which is a rare continuation pattern formation on the candlestick charts, which is indicating that the trend, which is on the bullish side, should continue. We are expecting that the floor is now well set at around 5,000, so the stop loss can be placed at around 49.90 on a closing basis. And even at this juncture, fresh long positions can be added. A trading swing can be expected towards 52.90, followed by 54.30.
Okay, all right. Thanks a lot for that, Sachi. Well, let's shift focus then to our special segment. We get a few ideas for profit from Money Control Pro. Anand Chaudhary of moneycontrol.com joins us to talk about a stock that he's tracking closely. Anand?
So today, let's talk about Emmer Enterprises, a leading contract manufacturer of room air conditioners and their components, holding a strong market share of 26% in room AC. However, with the rollout of the PLI schemes, Emmer has strategically shifted focus from RAC to RAC components and into non-RAC components. As a result, RAC share in overall revenue has declined from 72% in FY18 to 43% today. Emmer has entered into a joint venture with Resojet to manufacture fully automatic washing machines, both top-end and front-load. In the electronics segment, Emmer is expanding its product portfolio beyond consumer durables to applications like smart meters, defense, and industrials. This will improve operating margins in this segment to 10 to 12% over the next 2 years. To strengthen its printed circuit board PCB capabilities, Emmer has acquired Ascent Circuit, simultaneously partnered with Korea Circuit for HDI and flexible PCBs. Emmer is putting 650 crore in a hostel facility that will double its PCB capacity by FY26. Under the government's electronics component PLI scheme, Emmer is entering HDI and substrate PCBs. The combined capex for next 5 years will be 3,000 crore. Lastly, its railway segment that is rebounding, will resuming Vande Bharat train and metro construction. Though stock isn't cheap, it is trading at premium valuation of 50 times on FY27 earnings.
All right, with that, we'll slip into a short break. On the other side, Rajendra Gandhi, who's the managing director at Stovecraft, joins in to discuss the company's fourth quarter numbers. It's a little wobbly out there. We were talking about the advanced decline ratio. Now it has moved into the favor of declines. We have about 1,261 stocks which are in the red for about 1,200 stocks which are in the green. So those lines were crissing and crossing and now intersecting with the red marginally above the green. Among the stocks which is losing today is Stovecraft, reported its fourth quarter numbers, a 45% dip in their profitability. Saw a significant improvement in their EBITDA as well. But we have Rajendra Gandhi, who's the MD of Stovecraft, joining in to discuss the quarter that went by. Thanks a lot, Mr. Gandhi, for joining in. The EBITDA, the net profit, all of that aside, let's talk about the revenue. I remember us having a conversation here on CNBC TV18, and you had earlier targeted double-digit growth for this year. And not just that, you also said it would be in mid-teens, etc. You haven't met that. For 2 years in a row, the revenue growth has been 6-7%. What's causing this slowdown in revenue, and what's your outlook for this year?
Good morning. On the quarter gone by, we had missed on the planned revenue for the quarter. There was a little slowdown in the general trade. There is a change in the technology for our coated cookware for exports. So we have geared up for that now. So we could not execute all the orders that were there in the last quarter for our exports. There was also a decline in the institutional and that last mile delivery business. So all this put together, from our planned revenue, we were short by almost 10% of our revenue, which is also reflecting on our, though there was increased gross margin and EBITDA, is reflecting on our PBT and PAT. Overall, for the year, we continue to grow. And going forward, we believe these things, particularly on the export business, there is a very strong outlook. And with the domestic business also getting up, we believe that we'll be back with the growth. And as planned, we will definitely be able to.
What is that growth? What is that growth? You said you'll be back with the growth. What is that growth?
So it will be definitely above the double digit. And also we are working on improving our gross margins from the current level. We both the EBITDA and gross margin, we'll be able to improve on margin by at least a percentage on both.
Okay. All right. Hi, Mr. Gandhi. Mr. Gandhi, the street must be flummoxed, right? A second year in the row, you're saying that you'll grow at XYZ and then you don't grow at that.
Yeah.
How confident are you that this time you'll do a double-digit growth? And exports, you're saying that there is strong demand out there. Last year, how much did it contribute? And this year, how much you expect it to contribute?
So we closed the year at about 160 crores on export revenue, which we believe will have substantial growth here. We have a very strong order book, but there is a change in the kind of coating that we do, which we are going through the learning curve. As soon as we stabilize this, on the order book, we have a very strong order book. If we are able to deliver, we can also see a growth of about 55-60% on the current number on export.
All right, 55-60% if you're able to deliver. You know, Mr. Gandhi, not only is the street flummoxed by you not having met your revenue guidance, they are also flummoxed by the fact that the presentation hasn't been uploaded on the exchanges yet. It's not something that you do regularly. You often do it immediately after the results. So just wanted to understand what has caused this delay. And for those who are used to seeing the presentation, are also used to seeing what products, geographical regions, what categories, what did they do in the quarter? So if you could give us a sense on how cookware, appliances and stovetops did in the fourth quarter. If you could break that revenue down for us categorically.
On the presentation, there could be a glitch. I'm not very sure why it was not. I'll get back to the team. On the growth, I can tell you that we continue to grow on the small appliances. By value, we grew by 25%, by volume about 6%. Our pressure cooker, we could grow by volume by 1.4% and on value about 0.5%. And cooktop, we could grow on volume by about 6.7%. Induction cooktop, we grew in volume by 2.3%. The mix for us, of course, the small appliances continue to dominate. So we are growing faster than the other categories. So 43% of the revenue is contributed by our small appliances. For the cookware category, that is including the cookware and the non-pressure cooker category, is about 39%. And the cooktop, that is induction cooktop and the LPG stove categories at 18% on contribution to revenue.
All right, Mr. Gandhi, you had that tie-up with IKEA, right? Partnership with IKEA. And you were saying that at peak in the next few years, it can do what, 200-300 crores, right?
So we have set up the facility, and we are gearing up to the delivery date, and there's a process of development. We are likely to start business in the third quarter. More of that business will start seeing in the fourth quarter. We are likely to start delivering from November. The plant is getting ready. Yeah, it's a great. We see a huge potential there. Apart from IKEA, we have multiple retailers globally, particularly from America, who are more keener to work with us. We have a very strong demand side and also a strong order book on exports. Of course, the execution will be what will be able to deliver. And if we are able to deliver, the next few years seem to be very strong on exports.
That's the golden question, sir. If you can deliver, that's going to be very, very important, because you have told us you have the capacity. You need to ramp up the revenues. Execution doesn't seem to be catching up. And if I got that correctly, last year you did 160 crores of exports. And this year you're saying there's a possibility that it could even grow by 50%. Is that correct?
Yeah, right, sir.
Got it. And what about on the margin aspect? Realistically, what kind of a margin guidance do you want to give us for this year?
We are able to get to the 38% as envisaged and planned. The margin side on gross margin, we are able to correct. At EBITDA, because there was a little short of the revenue in the last quarter, we could not achieve the 11%. We are at around 10.5% on the EBITDA margin. We believe both at the gross margin and EBITDA margin for the current year as a whole, we'll be able to improve it by 1%.
Right. Mr. Gandhi, I'm looking at your numbers, compounded sales growth, your profit growth over the last 5 years and 10 years. Over the last 5 years, your sales compounded at 17%. Last 10 years as well, they compounded at 16%. Last 3 years, the sales have not come by. They've compounded at just 9%. And similar is the case with your return on equity as well. 5 years compounded number is 14%. Right now, the average is 9%. Profitability as well over the last 3 years has actually declined by 13%. What is this issue structural? Yeah. And what can you do to improve it? I mean, that's what the street would want to know.
This is a planned investment that we have done, and which is resulting in lower ROCE. We have been investing in the last 3-4 years. We are almost at the fag end of the capital investment, or I can say that is almost done. We are ready for the larger growth now. We have the capacities in place. We also see an opportunity that is ahead of us. Even on the demand side, we don't see a challenge. More particularly, larger demand driven by exports. And when demand in the country also comes back. So this both, we are very confident on that. Okay. So we are at that inflection point where from here on, we'll see improvement on all these ratios.
All right, Mr. Gandhi, is it an industry problem? If yes, are you outgrowing what the market is growing, or are you degrowing less than what the market is doing? And according to your assessment, have you gained market share?
In each of the categories that we operate, we have definitely gained market share. In majority of the categories that we operate on volume, we have larger market share than any of our peers. Definitely, the demand side was not very strong in the last 7-8 quarters in the overall domestic market. But we are poised with all those changes in the government policies with increased custom duties, with deterrence on imports. We are now, being a manufacturing company, upwards of 95% of the products that we sell are manufactured within our facilities. We are highly backward integrated. This gives us a huge headroom over competition. So we are actually ready for that larger opportunity that lies ahead of us. And even on the margins, we are very confident now with where we are. We can improve on this. So it is that we have a higher depreciation because of this, and that's why you see a lower PBT, PAT, which will get corrected.
So you're gaining market share, you're guiding for double-digit revenue growth this year, and some margin improvement. Are we getting that correct?
Perfect.
Thanks a lot for joining, Mr. Gandhi, but we're going to hold you to these numbers, and your investors will be hoping that this time around, at least, you deliver what you have guided for. Appreciate you joining in and speaking to us here on CNBC TV18. Stock down close to around 4.5%. In the last few trading sessions, it's been seeing intense selling pressure on rather large volumes as well. Slip into a break, come back, we'll continue our focus on markets. Well, let's cut across to SEBI Chairman Tuhin Kanta Pandey, who's addressing the press. Let's hear him out.
Thank them with a round of applause. Unless we are secure, our economy cannot grow. It's an honor to be here today and share my thoughts on the key growth enablers that can propel India towards the ambitious yet achievable vision of becoming a Viksit Bharat, a developed nation by 2047. As we stand at this pivotal juncture in our economic journey, it's clear that India's transformation will be powered by a convergence of long-term investments, infrastructure expansion, technological innovation, and deep institutional reforms. The government's commitment to building world-class infrastructure, improving ease of doing business, and unleashing entrepreneurial energy has already begun to redefine the contours of our economy. Digital transformation, the emergence of AI, and the strengthening of digital public infrastructure are unlocking efficiencies and inclusion on an unprecedented scale. These developments, combined with strong macroeconomic fundamentals, policy stability, resilient financial market ecosystem, are creating an enabling environment for sustained capital formation and productivity-led growth.